Okay, it's Monday, August 31st, 2020, and this is your weekly look at the latest Altos Research data that came in over the weekend for the entire US real estate market. A little housekeeping before we dive into the data this week. As a reminder, all this data is available to Altos subscribers. If you're a realtor who's invested in being the voice of the expertise and guiding your clients to the best buying and selling decisions right now in this crazy market, then you should head over to altosresearch.com and subscribe. Also, we have our full hour-long webinar this Thursday at 10 a.m. Pacific. There's a link to register for that in the description below. So if you want to dive in for longer than these 5-minute videos, we'll spend the time this week and you should join us. We've been talking for months about the crisis of available inventory in this country. Ultra low interest rates and insatiable buyer demand just it keeps driving inventory lower and lower. This week we had the third week in a row of actually rising numbers of the newly listed properties, up to 77,000 this week. So this is sort of a normal level for the season. This is good for all players. Realtors have a little more product to move and buyers have slightly more new selection. The actual total inventory fell by only 2,000 properties this week, down to 591,000 single family homes on the market. It's less than 0.5% drop this week. It's dramatically lower than normal, of course, and you can see that's the dark red line on the chart here. So that crisis low inventory is not changing anytime soon. Those signs of it changing anytime soon. Typically in September, we get a couple of weeks of increased inventory as the last few homes try to squeeze in sales before the end of the summer. Then later in September, we start the weekly decline in inventory as properties go into contract and dramatically fewer get listed each week for sale in the fall. So what's really scary right now about the next few months is like how we could possibly have such a crazy low inventory market next spring. So based on recent year trends, Altos is now forecasting that we really should expect to start 2021 with fewer than 400,000 homes on the market for the whole country. That's barring any economic shock or, like in particular, an interest rate spike. That if the conditions now continue as they've been, expect to begin 2021 with only 378,000 homes for sale. Our forecast is 378,000 homes for sale at the beginning of January. That's like half of where we were to start this year, which was already record low. You can see here the weekly changes in inventory over the last 5 years. The light blue on the far right of this chart is what to expect in the last 4 months of 2020 until the second week of January, which is the trough of inventory before the spring market resets and starts to come on. You can see here in the blue, we only had a few weeks of March this year with our sort of normally increasing inventory. Every other week of the year, we've had decreasing week over week inventory. As far as prices go, you can see this week we ticked down just a fraction to 353,300. September 2020 prices actually look to follow a normal seasonal pattern, which is normally flat week over week, stay about the same. Then prices pull back in the fourth quarter as the good inventory is gone and buyer demand backs off for the holidays. So we're at 8.7% higher. Home prices are 8.7% higher than last year at this time. And so you can expect that 8% gain to hold for all of 2020. It's a remarkable year for prices. New listings came in at 315 this week. Again, that's behaving normally for the season, staying stable week over week, basically until the fourth quarter. So as I mentioned already, we have our hour-long webinar this Thursday, September 3rd at 10 a.m. Pacific. The link to register for that is in the description below. As always, visit altosresearch.com for full details and the latest data. Subscribe to the YouTube channel to make sure you get these videos each week. Please post questions in the comments, and we'll also try to take questions in the webinar this week. If you have a view on the market that you'd like us to explore, or some questions that you have that we want to dive in more detail. More next week. That's the data for this week. We'll talk to you soon.